Welcome back to Smart Nonsense. This is episode 1,000,005. I'm Henry. That's Dylan. We're back again with Ice, our friend who is a banker, an investment banker. Are you technically an investment banker?
No, and here's a pro tip. Not everyone in finance is an investment banker.
I know. I thought you were, because I always hear IB.
Yeah.
What do you call yourself?
I'm a trader. I'm in trading.
Okay. In St. Louis.
I think it's important that you know what an investment banker does.
Here's the lecture.
Please.
Because I was in the same boat as you. I was like, investment banking, that's what everyone's saying. Like that's what is hip right now.
I put it all under that
and
umbrella.
Most people don't really know what they're doing, but investment banks, what they usually do is, you guys know how IPOs work, right?
Yeah, but break it down for
basically, anytime a company, right? So let's say you have a company out there that's private right now, right? So no like normal people hold stock in this company. They just have money privately, whatever. And if they want to raise money, what they'll do is they'll either go through and make a loan. So that's where I'll talk about what I do, or they'll go into the equity market and they'll do an IPO where they sell a bunch of their shares. So they're selling shares for part ownership in the company.
Is initial public offering.
Yep. And so that's what investment banks do, is these companies will go to the investment banks and they're like, hey, can you try to sell our shares out there and see what price you could get? So investment bankers kind of coordinate that deal.
So MC is also not an investment banker.
Yeah. Which is something you guys should have known after 2 podcasts.
I knew that. I
think you
really
introduced her as one.
We need part 3. I introduced her. Me.
Didn't you introduce her?
You got to listen back. You got to listen to the tapes, whatever Donald Trump says. That's not what I said. No. I'm turning into it. This is not good. Okay.
Wait, Zoom just flickered.
No, that's your screen. It looks good from here.
Okay. So, thank you. That's good to know. So you're doing the thing. You're a trader in St. Louis. We talked about your experience at Morgan Stanley. Dylan, am I cutting you off? Wait, I just dropped the name. I dropped the name. That was an accident. Doesn't matter.
Oh, the company name?
Yeah.
If you were editing this podcast, I would be fine with it. But now I got to go in. I'm already editing. It's fine. So I'll just dub over like, stupid.
Yeah. What were you going to say?
So I was going to say, Pop is not an investment banker. He doesn't deal with the IPOs. He does deal with when they want to put out bonds to raise money. Is that true?
Yeah. So it's kind of like IPOs, but in the debt market, right? So IPOs is that you're selling part of your company. If a company doesn't want to do that, is they'll come to the debt market and they'll release these things called bonds, which is basically like a piece of paper, right? And so what it says is, hey, if you give me, let's say $100 now, the company is saying, I promise you, I will give you a certain amount of money semi-annually. So let's say it's like 2% of whatever the bond is worth. So usually around $100. So we'll give you $2 every 6 months if you give us $100 now. And then at the end of this bond's life, which can either be 10 years, 20 years, whatever the company wants to do, they'll give you that $100 back. So, and a common misconception is that a company will only do this if they don't have cash. But most companies are sitting on a boatload of cash, but they still choose to come to the debt market because they want to save that cash because of like any hardships, right? Like Corona right now. Because of COVID, there's so many companies that have come to the market and issued debt. We're talking about trillions within the span of 3-4 months.
Save for a later date.
So,
yeah.
Belky.
No, I'm not saying you save for a later date. They're saying let's just save all that money for a later date.
And they also use the cash that they have to use as like growth, like to grow in other areas and to invest in projects.
So, Pop, your company now is probably in a better position even before coronavirus in terms of like or at least not in a worse position. And I remember Pop texted Belky basically like, hey, you should come work for me. It's a good stable income or whatever. And Henry
answer that?
Yeah. Henry texted me. He's like, this guy does not know anything about me because that's the last thing I do.
I forgot about that. Yeah, you texted me. You said, was it that specifically? I don't know, but you told me I should go there and do something.
I don't know,
for
something
a good,
about
stable
steady income. But basically, my point being that this is like in the finance world, you never really, or at least your position doesn't seem like you're in trouble. Like you haven't been impacted very much.
No, and if anything, COVID probably helped us too, because so what happens is when people get scared of the market, or because general public does not know much about the stock market or about the debt market.
I don't think you do either, Pop.
Anyway, so what happens is they'll take all their money out of like what they see as risky, so out of stocks, and they'll move that towards bonds, because bonds are considered a safer investment, right? So
it's like the counterweight of stocks.
Exactly. And so whenever you see you'll see headlines saying like, oh, COVID cases have gone up 25% in a day, markets are selling off, stuff like that. And what happens is that companies or investors are taking the money out of these public companies and putting it into treasuries, which are like bonds that the government is selling, because that's a very safe investment. It's not a high return, but it's safer.
This could not be a better segue to get into the age-old battle of, we've got Dylan Jardin coming in at 100, don't want to know how many pounds. He is Mr. Target Date Fund.
Do not give me a boo.
On his left, we have Mr. Blue Chip Stock Picking Extraordinaire, Panayoti. Guys, and I did neither of the things you suggested, but why should Dylan not be automating and putting all of his money into a target date fund to never think about it?
Well, so do you want to give a little context about that?
We did before, so
in a previous podcast, you guys talked about that.
You should be listening, but okay.
So, whoa. To be fair, I listen to every podcast.
I know.
Yeah. Okay.
But I don't want to go over it because we took 10 minutes to do it another time. So Dylan's really into automating and making easy long-term growth. You want more control over your assets. Why?
Right. So I'm not saying that he shouldn't be doing that. That's a different that's a different idea. It's a different opinion. But I think he's missing out on a lot of money by doing that, because what he's doing is called passive management. You put your money into this fund that who do you have your money with? Charles Schwab? What should I be saying that on the podcast?
Yeah.
Okay.
Yeah.
So he has his money with them. Charles Schwab creates an index, which basically just tracks whatever it tracks, and they call it a fund. And he puts his money in there, and then he just lets that money accumulate, right? You pay a fee whether you take when you take it in or when you take it out.
He's getting antsy. He's getting real antsy.
Anyway, so Dylan, based on do not do a boo. So Dylan, I think just based on reading maybe half a book, was like, oh, I think this is the best idea. But my ideology is, hey, we're 23 years old. This is a little bit different because I have a stable income, so I have a decent amount of money to save and to put elsewhere.
Dylan's gonna have a panic attack. You're giving him all the material he wants.
So anyway, so my strategy was, hey, let me pick 6, 7, 8 companies that I think will be there in the come 30, 40 years, and I still think we'll have a pretty sizable market share, right? And let me just leave my money in there. I'll monitor how the stock's doing, buy, sell, whatever, things like that, and I'll generate a pretty high return compared to his fund. And so that was my ideology, and that's what I pitched to you, right? So this all started because we were pitching our different ideas to you.
Yes, correct.
Which I think confused you because you've done neither of those.
Well, I mean, I did something in between, right? I took a total stock index that has a lot of your picks in it, and it's not quite a target date fund, but I think I'm going to move into a target date fund. Dylan, where's your rebuttal?
Well, one, let me preface this as I preface everything with, I'm slowly changing my mind. Not to Pop's method. Keep that in mind. I'm not going to that. Get away from the soundboard.
What do you guys have up on the screen? S&P 500?
He's trying to touch my soundboard. So he has these 5. What do you have? Like Apple, Amazon.
You want me to tell you my picks?
Yeah, tell me your picks. What are your picks?
Amazon, which I just bought another share today. And an Amazon share is a pretty expensive.
We get it.
Okay, right. Amazon.
Was it $2,500 a share?
3,000 it closed today.
Really?
Anyway, so Amazon.
Okay, quickly, rattle them off.
Amazon, Apple, Square, PayPal, Domino's, Boeing, and Viacom.
He heard Domino's from the last podcast. I was like, Dylan knows what he's talking about. Let me get that.
When was that podcast shot?
So,
because I bought the stock June 9th.
Yeah, you showed me before that. But in the book, I Will Teach You to Be Rich, he talks about how unpredictable picking stocks is, in the sense that, right, if you picked Google in 2003 or whatever, it returned, I don't know, however many percent, and Domino's was tenfold that. So,
Well, here's the thing with that, and I guess they're tech stocks, so there's some more leverage there. It's not like you're buying, I guess, Coke or something that's already kind of maxed out. There's not much growth there. That's why I don't really like it. But I guess you have more tech stuff than I thought, so it's not that bad. It's gonna probably mirror a lot of the S&P because those carry
exactly
the S&P, so it's not that much different, especially with more stable companies. So in my mind, and I was talking to someone actually for an hour before this, who I asked him this question. He's like, yeah, it's basically going to do the same. It's just fewer eggs, I guess. Like Belky, right now you have the S&P like total index, I think. And that's what he recommended, the person I talked to. And I see that. Like right now, I shouldn't have money in bonds or REITs, which I do. It doesn't
You
make
have
sense.
so much time to be aggressive right now. You can go all in on stocks.
So you listen to this guy, but not me?
Yeah, Pop.
Hey, get closer.
He's just talking trash. You don't want to hear that. So yeah, I'm now of the opinion that I'm probably gonna do something maybe like what you're doing, Belky. Either what I'm currently in that I have this automated passive investment. My turn to talk? Sorry. I swear to God. So passive investment, just like want to get the ball rolling. And then once I have time, this one book, One Up Wall Street by Peter Lynch, which I mentioned, I think briefly him before. I read this back when I was like 18, but I forgot about it. The guy I talked to was like, this is a decent approach if you're trying to optimize. So you get like your S&P or like an index for like high tech stocks or something like that.
NASDAQ.
Whatever it is. Mm-hmm. Some like tech stocks, because tech is just going to go up or whatever. Like that's probably, I don't know if that's the best way, but just get an index for like 70% of your fund. And the other 30%, you can kind of play around with stuff that you encounter in your day-to-day life that works well. Like say, I don't know, like right now I'm fed up with some Adobe products, and you'll have a company like Canva who comes in. Maybe you're not aware, but like I use Canva because it's super easier than Photoshop. And so if you come across that, now you're like, oh, this is my one stock pick for the year. You put a decent amount of money in that, take some risk, because again, we have 50 years to rebound if something goes south. But I realize that I'm kind of taking the sleeper cell approach of this, like it's not going to grow that much.
Question, can you get into a target date fund when we're like 35, or is it too late?
Yeah, you just go by the date of the fund. So it's like I might keep what I'm currently doing because it doesn't hurt me, but I could be riskier and get more potential upside. But again, it's just I don't want to focus the bandwidth on it right now.
Right.
And so I don't want this to turn into too much of a finance podcast, but
yeah, that's
my current thoughts.
Okay, then let me move on to some nonsense. So that was way more successful than the text chain we had. I think we're all kind of on the same page there. We're just way more passive about it. Well, and if we wanted to hire someone like you to actively manage our portfolios, granted, you said you would, or you'd mirror ours, but like that would cost us a ridiculous amount in fees to do. Moving on. When I say,
come on, quote, you're just going to have him talk? All I said was a bunch of gibberish that made no sense and was completely wrong.
No, I have a question. When I say courage, 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 what comes to mind? Actually, Pop doesn't know, so this isn't that fun.
Wait, me Pop or him Pop? Because we're both called Pop, by the way.
Pap. So Dylan is Pap.
So
you Pop.
Do I act professional, or do I actually say what courage means?
Maybe it's a bad question.
This is why I'm looking for a new co-host. I really tried to give this all to Belky because I'm in the same room as Ais, and it's kind of weird to run the show. But he's dropping the ball left, and I'm joking. Belky, I think we do want to talk about a little bit of the parental influences and stuff like that. We talked about Cocodrillo.
Yeah, Olayan.
But now we have Olayan.
Wait, can I also say something really quick before we go into that? So you guys not remember, but Dylan just said how he wants, Henry to run the show. But like right now, so he can ask me questions since you're right next to me. So this is the whole of today. So I think Dylan told me yesterday, he's like, hey, can you be on the podcast tomorrow at 5:30? So like, yeah, sure. Just like have some questions ready for me, whatever. So it's 5:25, right? I'm still working. I have like probably 5 more minutes of work. I come into Dylan's room. He doesn't even come to tell me anything. I'm like, so are we shooting this or not? And he's like, no, sorry. I don't even say anything. He goes, are you ready to shoot in 3 minutes? I'm like, and then I say, do you have any questions ready for me? He's like, nope. I'm like, are you taking this podcast seriously?
This is the truth. So. And what did I show up with? I have a whole page.
And then Henry has at least like 7-8 questions.
Have you
and
heard
this
his
isn't
questions?
even my podcast.
Oh, how do you memorize math? First question.
If you want to hear the response to that, head back to episode 1. Okay,
Ooh, that was good.
You have...
That was good.
All right.
That's a callback.
+1.
You have probably one of the strictest mothers I have ever encountered in my life. She just yells at you. She is mean to you. She berates. She's awesome. No, she's awesome. But she's very adamant that you do what you do, and there are no ifs, ands, and buts. What was that like growing up? Was it always like that? She's just a hard worker.
Yeah, and she wants what's best for us. And Greek parents are very strict, and so her rules where it's like either you do my rules or you're going to be grounded. Things like that. Middle school, if I got a single B in a class, I would be grounded, punished, like no TV, no nothing. Which is weird because my twin brother would get B's and C's and nothing would happen to him. So I have a twin brother who is doing his master's in architecture at University of Michigan, and he's more on the artsy side than the math side. But he also wouldn't study as much, didn't really care about school that much. And for some reason, we were held by different standards. And so...
Yeah, really quick, when did that change? When did it start to become apparent that he was the artist and your mom laid off him?
I was probably elementary school. School. So we went to a private school, and this might seem as like a brag or something, but we went to a private school. This was in Cyprus because we were raised in Cyprus. So I went to a private school, an English private school. Going back to math, I actually had a 50% discount into that school because of my math level.
Easy pop.
And my brother didn't. And so my mom started seeing my mom's into art too, so she knows good art. And so from that school, she put him into art classes. And then my brother, or Emmanuel is his name, we call him Conchita. Conchita would come back with some amazing drawings, and she's like, wow, this guy's a really good drawer, so let me put him in art school. So she started doing that. I was more like math. I was very studious, got good grades. So that's probably when I started differentiating into hey, okay, this guy's more into math.
So she just wants you guys to leverage your skills.
Exactly.
She's not you have to be an engineer, doctor, lawyer.
No, she. So her parents, this is what she claims, her parents made her go into finance. So me choosing finance has nothing to do with my mom. She did not want me to do finance at all. She's like, you need to go into something else. You need to become a math professor. She was probably advocating math professor the most. Oh, she wanted me to be a doctor. And then, so my mom didn't really have an influence. My parents at all, no influence on the job selection. Definitely on me kind of sitting down, studying a lot, getting good grades.
That's fascinating because we talked to MC, right? And she's got a similar pressure. I have a similar pressure at times. What's so cool here is you were twin brothers. One was STEM and one was artistic.
Yep.
But it sounds like your mom didn't really put that pressure on towards STEM. It was more pressure towards you're going to do something and you're going to do it really well.
Yep. And my mom was a teacher, single parent. So my parents got divorced when I was around 9 or 10 years old. And that's why we made the move to Miami. But she was on a teacher salary. She was raising 3 kids. She somehow afforded 3 kids in college. And we were definitely lucky there because we had some pretty good financial aid packages because it was just a mom on a single teacher salary. And she raised us really well. And, we're all really good people. And
clowns.
Yeah.
3 of the biggest clowns. Yeah. It's not even funny.
And we're all very different characters. We all have very different interests. My brother's doing a consulting engineering in Chicago with a big firm in Chicago. My twin's doing Masters of Architecture in UMich, and then I'm in finance. So she did a great job with us, and that comes down to being strict. I read this article how it was a son when he was 30 years old, and he was saying this horrible person raised me. I couldn't go to parties. I couldn't go out. I had bedtime at 9 p.m. And then he'll say all the bad things. And to wrap it up, he's like, I now make this much money. I'm now this successful. I am a good person. I care about others. And that all comes down to my mom. And it's true. Like your parents,
It sucks at the time. Dylan's been quiet for a while.
It's the story of a parenthood, I think.
Yeah. It's sharing a microphone. I want to give it, spread the love because I'm such a giving person. Pop, here's my question for you.
Yeah.
If you went to Olan and you were like...
Olan is my mom.
You went to your mom and you said, you know what? I went on the Smart Nonsense podcast with Henry and Dylan. And somehow, I don't know how, but they convinced me, 1, to get into passive investing, and 2, to quit my job and join the podcast. What would her reaction be if that was a serious thing that you said to her?
That's a great question.
Because you talk every day.
That is a good question, and that's coming from the one who didn't prepare questions. So that says a lot about you, Henry. So passive investing.
No, easy. I didn't. I just brought that up as a joke.
Yeah, I mean, she would not like that. She would probably call me every 30 minutes. I also speak to my mom every day, but she would call me every 30 minutes saying, "This is not right for your future. Think about think about where this podcast is headed."
What if it was an opportunity? Is it the money, right? What if the podcast was generating $250,000?
A ton of people. Yeah. Sorry.
I think you're right. I think, it's probably about the money. Like she'd think like, you have a stable salary now. You're making a good amount of money. Why would you drop that to go work for a podcast that's not sustainable? It's not, and I don't mean to like be offensive here, but like it's not making any money. Why would you do that? What's going on? She would call
Mom,
me.
You gotta risk it to get the biscuit.
Here's what I love. All right, we have a complete inversion.
Hey, get off me the mic. Going You're for swallow it.
Yeah, why is he talking?
I'm getting really excited. Okay, I just turned into podcasting Dylan for 2 seconds. But here's what I'm saying: is Pop in the career world is Mr. Stable. He just wants the steady, reliable income. I'm the same thing in investing, and we completely flip flop with careers. So I'm thinking like, I have 50 years to invest. I can take some risks, like invest in fewer companies, and whatever.
It's flip flop. It's flip flop. Ice is going to do all that when he retires, or whatever.
Yeah. So my big thing is, I don't care about stability because I can take any sort of risk, and maybe you don't see risk in your investment strategy. That's fine. But like, I see there's so much time to rebound from any sort of failures that we have that there's no risk here. Do you see? And
Ice and his mom it's like stable now, front load, so that you can do whatever you want on the back end.
I think I would agree with some of what you said. I don't have this job because of the stable income. Like I went into finance because I like it. Mm-hmm. So I like most people would make sense. Most people would make sense. Like, hey,
you do just love it.
I like what I do.
Yeah.
And that's why I'm so passionate about investing and telling you guys what you should do.
All right. Here's what I want to say, though.
Hold on. Pop. People need to tune in and watch this video because the mic is just on 180 degree swivel right now. Dylan pulls it over. Ice pulls it back. I mean, this is just great.
Yeah, this is going to turn into a video-only podcast. But what I want to say is that, Pop, if you had the same job, say you were running the finances for Arsenal right now.
That's my last question.
A big football.
That is my last question. And then really quick, Dylan, you need to ask your final kicker, which you asked. Yeah, I'm sure about.
Okay. So, Pop, would that be a preferred job for you to work for Arsenal doing their sort of financial business stuff?
Preferred job.
And what's stopping you? Because you've sent me like job postings for ESPN or Arsenal, and same kind of stuff to what you're doing now, but in an environment that you really, really love. What's stopping you?
So yeah, a little bit of context is I am in love with sports. I probably follow every sport, my biggest passion is probably Arsenal Football Club. They're a team that plays in the English Premier League. I don't know why, but I just have a huge crush on like that team. It's crazy, and I'll follow them anywhere, and I'll try to go on trips to go watch them play. But ideally, yes, I would like to do this for a sports team. But again, that requires a lot of experience beforehand. And a lot of these roles that I've sent you that I've come to realize need at least 2-3 years of experience. So yes, I would love to just pick up, kind of pick up and take on risk and just leave and go to England and work for Arsenal and kind of start from the ground up. Whoa, that's an idiom. I got it right.
Start from the ground up.
Clap.
Yes.
Is there a clap? Doof, doof.
Give him a cheer. Give him a cheer.
Cheer. You laugh. That's not funny. I got it right.
Dylan, we should have a laugh track going all the time. We'd be way funnier.
But
so it sounds like you're on track to do that.
I would definitely love to do that. And, it's more about getting the experience now. And that's why I took this job in St. Louis, because I thought it'd be the best in advancing my career and moving up the ladder quickly.
Right. Smart. Dylan, hit him with our favorite final question. Let's take it home.
All right, so Pop.
No, don't do that voice.
All right, I don't know how to do this. We're looking for the legacy, Pop. What do you want at the end of your life? Everyone's at your funeral. There's probably going to be thousands of people there already because people that have copied your homework.
Picking up on the side, yeah.
So you have this
Brown
huge
econ
audience.
department. If you're listening,
there's going to be a lot of successful people there. What do you think, or what do you want them to be talking about? What is your legacy? What do we know what do we know Pop as for the remainder of history?
Yeah. To be completely honest, I do not want my career brought up. I don't want to be known as someone who is very successful doing his job. I want to be known by the type of person I am. So I want to be known as as someone who cares a lot about friends and family and always looking out for other people, always trying to see his friends succeed, which I think why is I love this podcast so much and why I always message you guys, even though you guys don't listen sometimes. But that's what I want to know. That's what I want from my funeral is people come together, they celebrate my life, that I was a good person, and nothing career related. Hopefully I have a big family. Everyone can remember me, but that was the big question.
No, that's I mean, it makes a whole lot of sense. I think you're on the right path.
But I don't want it to be career related.
You love what you do, but you also love people.
I think I'm a big people's person.
Well,
there it is, people's person.
Some people would want to have a crazy impact of starting a company and having it be an Amazon and just touch a bunch of lives. Others, they just everyone that they touch in their real day-to-day life, you're remembered in a positive light, which, mostly you and I, we have a good relationship other than you just getting on my nerves for being... Pop is the biggest trash talker. Right now, I'm just scoreboarding him like crazy in this little game because I don't want to go to St. Louis, all right? He's wagering that I have to go to St. Louis. He basically has to drag everyone there. No one wants to go out there because all they have is this big old arch, and that's it. And just a zoo with no animals.
He thought was called the Ark. St. Louis Ark.
St. Louis Ark. So we have this wager. He's way too cocky about that stuff. Other than him being overly confident in his sports, he has been a good person to me, and that's always nice. So, do I have a tier one? Do I have a crying? No,
is there
at the ballpark?
Thank you. Everything's ballpark. Thanks again for being here. I mean, do you have any plug before we sign off? Doesn't sound like it. You're just happy to be alive. I mean that genuinely.
Happy to be alive. I do want to stress the investing ideology I have.
Oh, there he is.
I'm serious. I will back this 100%. I think what Dylan is doing is, it's not a bad idea, but it's not the best idea.
Okay, so you don't want to be remembered for your career, but on this podcast, you want to be remembered for your financial picks.
Correct.
I gotta go. Thanks for being here.
Get out of here, boo.
This was awesome. See you next time.
Yep.
Bye.